Rock on.
All right. Are we live? All right. Welcome to Wall Street Beats. I am Benjamin Braun. This is my friend Bob Morris and my other friend Kevin Bakes Baker. And we are here to talk to you about stocks and markets. Bob, you are the most interesting guy in our group this year. After, a little
Amen.
period on the mat where you had to keep talking about energy when no one wanted to talk about it. Now you're the most interesting man of the Wall Street Beats group. What are we talking about today? Oil's up 5 or 6%, right?
Yeah, so we're talking about oil again and the fact that tensions are ongoing with Iran. And the fact is, we've talked about this all along, that we don't think there are high odds of there being a resolution or a lasting resolution anytime soon. And you've got no regime change in Iran. And you've got these continued tensions now over the Strait of Hormuz. And my view is that Iran's still playing this game of trying to stall, stall, stall. They're hoping that at some point the Trump administration runs into a political brick wall, whether it's the opposing party here in the US or internationally from NATO or China, whoever, who says, look, we got to, just sort of negotiate and get to some sort of agreement that, perhaps comes short of the administration's goal of preventing Iran from ever having a nuclear weapon and taking control of their enriched uranium. And I don't think at the end that Iran really wants to uh, cave in on either of those. And if you look with the current regime, which again, there's been no regime change, and you look at their constitution, they have this is a religious war for them. We've said this before. This is not your normal party that you're trying to negotiate a deal with. They have a totalitarian goal to, globally have Islam be the dominant religion, and this is a religious war for them that they're fighting to the death. And so I think it's going to be extremely difficult to, with the current regime in Iran or what has been the regime. And again, it's not clear who is in charge over there. It's going to be very difficult to reach an agreement that meets the goals or objectives of the Trump administration as they've laid them out. So, this is going to continue to be a game of cat and mouse and a game of stall and deception. And, we'll see how this all plays out. And it's very difficult, I think, for the Trump administration, because the longer this goes on, the more pushback they're going to get politically, both domestically and along the international front. So, we'll see whether Trump says, look, that is a risk, and we just pull the trigger fast and quick and, go to the next stage of what he's threatened of blowing up all their bridges and power plants, or whether they sort of continue to negotiate. But at this stage, it looks like any sort of negotiation or lasting ceasefire is not likely or off the table.
Do you think there's a chance, because there's like a theory in my head, which is that the U.S. wants to keep this going, right? So if you look at exports of LNG or oil in the U.S., they just hit an all-time high last month. So boats will come, contracts, we reprice security, stability of oil, like, and gas. Like, is there a something to be said that maybe the US is actually the guys who are prolonging this?
I
Like
don't think
everybody thinks it's Iran, but like maybe it's us.
I don't think so, because you've got this big political hurdle for the Trump administration or Republicans in high energy prices. And the one thing that the Trump administration Republicans do not want is high energy prices and this continued higher cost of living to extend into September during the midterm elections. That is the worst thing that can happen. One of the worst things that could possibly happen for Republicans come the midterms is to be out there, fighting against the Democrats, pointing to the higher cost of living and these higher energy prices because of this war. That it's
I
clear. I
hear
think that one thing Trump wants, he wants lower oil prices. He wants lower oil prices quick. But is there
that.
somebody
Does
in the
he?
U.S.?
Does he? I mean, why would
He wants
why would
lower
you?
gasoline prices, I think, is more,
Yeah,
Well,
gasoline.
gasoline
Yeah,
prices.
yes, that's the same thing, right? Like that's just a
No,
refined product oil.
but
Like
hydrocarbons flow into a lot of other products that we wear. I mean, this jacket I'm wearing is, there's hydrocarbon products in it. So almost every aspect of our lives are impacted by higher energy costs.
100% agree with that. But I'm just saying that the U.S. is the largest oil producer in the world.
Mm-hmm.
largest LNG exporter in the world. Where
Yep.
it's very different than, like, if you think about pre GFC. I remember in like the Q3 of '08, where like we're like sub 6 million barrels. It's just a different world now. Higher energy prices benefit the United States. Like, it might not benefit the average guy. So your point is taken, but at the same time, like, I don't know. I feel like we can sacrifice a little bit at the pump for maintaining dollar dominance, maintaining the empire. And I think that that level of analysis is where things kind of like break down for this whole. I mean, how is Iran actually controlling the Strait of Hormuz with no navy? Like, I have no idea, and I know you don't either. And so we're just gonna speculate. But like, if we're talking about like oil here, where is the next move? Like, I thought that it got oversold. We got a little 5% bump. Would you buy or sell it here?
On oil at $87 a barrel, it's tough. If I had to take the over or the under, I'd probably still, my bias would be slightly more to the over. Still,
I I agree with that. I agree with that.
I
Like,
mean, it's going to be.
it's tough. I'm not trying to put you on the spot, but I'm just saying that, like, it is a weird situation where like oil is kind of dictating everything right now. And the market has gone from like this high beta to oil to like low, and now it seems like the beta is too low in essence. I mean, let me ask you one
To your
other
point
question
of
about.
to your point
Go
of
ahead.
U.S. wanting to dominate the global energy market, I think they would with lower energy prices. If they could do that and keep energy prices down, they would. But right now, we got this issue of 20% of the global crude trade being blocked in the Strait of Hormuz or being slowed down, and U.S. oil production is not going to ramp up here. None of these companies are going to go out and start drilling more wells with the uncertainty of long term. Where is the price going to be? And yes, we're going to continue to ramp up LNG, and natural gas prices in the US are pretty punk right now in this shoulder period down below $2.70. So, when you come to the stocks here, we were talking about this before the show started. I haven't sold anything. I haven't written any covered calls. I'm holding on to the names that I own. Oil's going to continue to be volatile, but I think in the long run, these stocks are still cheap relative to where the strip is. And we're going to learn a lot here in earnings, which start to kick off with some of the natural gas names in the next week, as to how these companies benefited so far in the Q1 from the few weeks that this war was ongoing or oil prices ran up at the end of the first quarter, and how they're playing out in now going in the second quarter and the rest of the year. And so I'm holding on to the names. And one name I wanted to touch on this morning also is EQT, which reports after the market closed tomorrow. And, while it's going to be a little bit volatile here, EQT down closer to 55, 56, Expand Energy, EXE at around 95. I'm very interested in those names. If you're looking to add, I already own those names. But given how punk natural gas prices here are in the shoulder period, and at some point we get into some summer weather and we can't forecast that, and we start to look the next winter, are we at a low here on natural gas for the year, for the near term? We're probably pretty close. In these stocks have pulled back, these natural gas names have pulled back pretty sharply here from where they were 2 months ago. So if you're looking for exposure in that regard, at around 95, I'd be looking very strongly at EXE, and at EQT around 55, 56, I'd be looking strongly at them. Now on the quarter for EQT, again, they report tomorrow after the close. I'm above consensus on the estimates for the quarter. Earnings wise, I'm at 232 versus consensus around 223. More importantly, I think production is going to be at the higher end of the range or where estimates are. I'm at around 612 BCF for the quarter. So I think, given what occurred in Q1 with the higher natural gas prices in Q1, I think they probably did better than a lot of names in taking advantage of that higher price and producing some of the shut in or constrained production. So, the question you probably ask is, would you buy it into the quarter? You're going to be volatile the next 2 days. But again, if this thing down here around 56, around there, I'd be buying it into the quarter. But I do think that they will beat on the consensus when they do report, and it'll be positive for the stock relative to the group here. So, in a sense, on a relative basis, if you're doing a pair trade, would I be long it into the quarter, yes.
Would you sell puts on it? Like, I mean, if
Yeah,
because
I think that's,
energy vol in general is kind of elevated right now. Would you sell puts like as a way to like be long it for somebody who's
yeah,
not long right now?
yeah. I mean, if you could sell $55 puts on EQT, I mean, that's one way of playing it. I would look to see what the premium is on that. Stock's at 58, but yeah, if you sell 55, $56 puts out 3 months, um, yes,
Yeah, I mean,
that's
I guess that like whenever I feel like there's something that's like, hey, I want to be long, and it's like the vol's elevated. I feel like buying puts or selling puts is like one of the few times I like selling vol, and
yeah,
like I don't know. I mean, it
yeah.
just
Look,
seems
I'm
like
looking the June 55 puts. You can get almost $2 for those. If the stock pulls back a little bit more, you might get $2 on that today. Would I do
yeah,
that? June 55 puts with a good, decent dividend yield. Yeah, that's worth trying.
yeah. That's like 22% annualized. It's pretty good,
Yeah,
and like worst case, you're long. Yeah. All right,
yeah,
I love that. I love Bob how you like to sell vol around your like core positions that you know well.
yep.
All right, let's move on. Kevin, what do you have for us today, buddy?
Yeah, before we go into the names that I mentioned on our internal chat, March 3rd of this year, I said I think I'm doing this right. Oil stocks are it's too late. They're too extended. It's too obvious for oil stocks. Oil service is up 4.2, and the XLE is down 6%. So far so good with that. Now Bob's been there, for years, and so he's making a tremendous amount of money. My point was for the folks that wanted to buy oil on the headlines. I thought it was too late, and I've been right so far. I still think it is, but again, if we start blowing up Carg Island, all bets are off. But so far, that call is held. I have three things for you. First is the SPY. Yes, that seems obvious, but my point being here is, and I wish I could draw my arrows. I'm fighting with my chart company, but the bottom line is we had new highs, but on 37% below normal volume. So it's a very feeble, tenuous rally, in my opinion. Now, it could accelerate to the upside. If I see expanding volume, I'll get more interested. The cues are the same, but I would caution people that watch CNBC breathlessly talk about new highs for the S&P, and at the time it was up 17 basis points. So yes, I like new highs, and price is what pays you, but this volume down here is unimpressive at best, and too I would be cautious about becoming too excited about the quote unquote new high headline. I don't see it being confirmed with the volume on the bottom.
Okay.
um Lily, and I think I misunderstood. I thought David was on, but Lily, I don't like. They have a big deal out there. I can't wait to hear David's comments on it. That's David Maris for members that are just tuning in. But Lilly, despite all the good news about the pill and GLP-1 pill and their leadership over Novo, it is spending way too much time around this 200-day, and I think threatens to break it decisively and head down to this 800 level. And the fact that it doesn't like this deal, I think, is another indication of sluggishness in Lilly. I think the bulls are satiated, and I have a hard time coming up with an upside scenario, fundamentally or technically, that will get this stock going higher. So Lilly, if you own it, I'd be really cautious here, and I would have sold a third back here at least. And I can't wait to hear what David says, either pro or con, with my comments.
Yeah, I mean, how far did the stock chart go back?
This is 1 year. This is the daily. Here's the weekly. It's a monster. And here's the monthly. So, I mean, it's been great. GLP ones are great. Everybody knows it now, and it's in the stock. So I would go hunting somewhere else, in my personal opinion.
I mean, but like, you know, research firms have a lot of research probably that you're not aware of. For example, like we had the girl who used to run the Alzheimer's division for Lilly, and there's like a bunch of Alzheimer's drugs. Like I used to work in pharmaceutical, or not, animal biotech. Like there's just all kinds of things that are under the surface. So like I don't believe in the concept that a chart can encompass what's going on under the hood at all.
Well,
And you know,
Alzheimer's has been a minefield in biotech and pharmaceuticals. If they have something that actually works, God bless them, and I will reassess. But for right now, with what we see, let's face it, this is a GLP-1 story, and until something comes out, and shows really impressive data in phase 2 and phase 3, and shows a different leg of growth, I stand by my comments.
yeah, but I would push back, man. The fucking biotechs they go in step jumps. So like charts don't really matter for biotechs. It's like
Well, this is a
pharmaceuticals,
biotech.
like
This is
you
this
get
is
a
literally with a
you get a drug
pharmaceutical
that
with a
passes and it goes like this. Like the chart doesn't really matter for a biotech because it's like so binary outcomes of like, hey, the drug is good or it's not good. So like
this
who
isn't a
really cares
biotech.
about
This isn't a biotech. I mean, this
it's
is a
kind of a biotech. I mean,
profitable.
they sell drugs, right?
Well, no, but biotech is the way I think of it is it's burning cash, and it has promising drug in the pipeline, and then they either, if they have positive data, it gets de-risked, and people put a higher probability on success, and they ramp the stock up. What drug, what data are they going to show that's going to ramp this up with where they are right now? If it was a
Okay,
a
okay,
startup,
okay, okay.
sure.
I can rectify this. Basically, biotech's like a 5 delta option. A pharmaceutical company is like a 40 to 60 delta, whichever way you want to go. Either way,
All
like
right.
so, it's not gonna move the same degree. I'll agree with you there. But my point is like there's a lot of smart people who work at these companies, and we don't know as outsiders of what's going on. Is all I'm trying to say. Like they might talk it up if they're trying to get their stock up, but like I don't know. I just feel like research firms are always undervalued because there's smart people who work there. That's all I'm trying to say, basically.
Okay, we'll disagree and part as friends. I go by my discipline and what I see, and I think this is an avoid at best.
Oh, I mean, you're the one who put the monthly chart up, and it was up and to the right. So okay,
No, this breakout here in 2018 is unbelievable. So I mean that this is gorgeous, and this is gorgeous, and this isn't gorgeous. This is ugly and not hideous, but we'll see how it resolves. But I think they're running out of positive news on the GLP-1 front, and I think it's going to be hard to make money.
you might be right. I mean, like I'm not an expert in that at all. So anyway, what else you got?
I got one thing that I want to just put in the back of people's minds. I'm starting to do work here, and again, I cannot buy individual names, but this is Vietnam, VNAM Global X MSCI Vietnam ETF,
That looks
and
great. By the way, that chart looks great.
right. Well, that's what I do
Yeah,
here.
yeah. I know. I didn't care what that was. I was like, yo,
I'm
that
not just a
chart looks
pretty
like a
face.
buy.
I'm not just a pretty face. So, and what gets me going is when I see volume like this. So I'm looking to see, what the components are. It's real estate. It's staples. Again, this is just me doing very cursory work at this stage in the game. But I like to let our members have a drum roll to an extent. And if I do come back and say, yeah, this is a screaming buy, I'll tell you why. And if somebody says, Bakes, you're out of your mind, the number two component was taken over, and that's the reason the Vietnam ETF is up, then I'll listen to it. So I want this to be symbiotic and conversational. But this is intriguing to me, and it's a candidate for one of the top 10 charts out of the 5,500 plus that I go through every month.
Nice. All right.
That's
Well, like Vietnam is a funny like chart to bring up, but it was a good looking chart for whatever it's worth. Good looking chart, and I also I would add emerging markets have had a lot of outflows. You know, a lot of people concerned about the energy, a lot of people concerned about the Hunger
tariffs.
Games capital dynamic. Like, so, districts 4 through 8, let's call it, to use the Hunger Games analogy, have
Yeah.
gotten hit, especially the ones with energy dependence. And it's funny because last night I actually coded up, I don't know, it was Claude or Perplexity, I don't know what I was using, but I actually did the top 50 countries, and I ranked them by fragility of risk based on like 10 factors. It's funny that like the hidden risks, you know, Singapore came up as the number one, and UAE come up as the number two because they have a huge food and energy, or not energy, food and water risks. And like,
Huh.
I think that's what
No, I'm just surprised by that. I would never thought of that.
I'll send it to our member chat. Actually, I'll send them
Please.
the website I created and the deck and all that stuff, and like basically it's an interesting like process to go through because you can think through things, and now you can have Claude or Manus or whatever, and you're like, hey, let's evaluate this. It doesn't have to be like, oh man, this is the best analyst in the world, but like that can work for you, and you can analyze these things. And like, so Vietnam, I'm sorry, this is long winded, but Kevin asked me what I was going to talk about today. And I like to talk about AI a little bit. And like, that's true. Like, Vietnam chart looks great. And I could make a million arguments why we shouldn't like Vietnam. So this is me giving a little knee or, tip of the cap to Kevin for finding that. That's actually interesting. It makes me want to think about like what's underneath the hood of those companies that are driving that. But like, it's cool.
I'm going to work on it, and let's compare notes, and let's have our members benefit. But I mean, frankly, I almost like the longer term chart more than the short term chart. So something's going on here. Let's find out if it's something we should buy.
Hmm.
Yeah, and I would say this is that my view is that we need to be thinking about the longer term charts in general more, unless we're selling vol or buying vol, because you know the computers are getting smarter and smarter. The models, these LPPL models, and like a lot of stuff, AR1 models, like you're just not going to be able to outcompete these things on a short term basis. And so you need to have a view, like, and I think that, like, sure, in the short term, oil's been great to trade. If you took the other side, long or short, but like Bob's been pretty good since I've known Bob. We've been in the show. Bob's very good about like, hey, I'm going to extract some income because I like this. And like, I think that more and more people should think about things like that of like, hey, I like this stock for the long term. Kevin blesses the chart. And then you're like, hey, along the way, I can sell some puts, I can sell some calls, I can do some things, dick around and increase my carry on the trade, because I just don't think you're gonna trade the machines. Basically, like I have a very strong view you're not gonna out trade the machines,
Yeah.
and so you need to go for a longer time horizon, and that means accepting more volatility. And like if you're gonna accept more volatility, it means you need to have a right liability structure for all of us who manage other people's money. If it's your own money, you can do whatever you want. But like, I think that's where the evolution of the market is going. Where like you need to be able to accept volatility and manage it along the way, basically. And Bob, what do you think about that? Like
No, I
you've
think
been
it's
pretty
great. And,
steady.
you pointed earlier, I love selling vol, and the charts really help when you're looking at selling vol as to when things look overextended or underextended. It's a good tool in looking to see where when vol ticks up, where you want to sell vol.
Yeah, I think so completely. I totally agree with that. And like I think that could be the thing that people need to think about more, not just what stock to buy, but find the right stock, learn it, know
Mm-hmm.
it. Like Bob knows EOG like the back of his head, you know what I mean? And or back of his hand or whatever you say. but he's going to manage it along the way. And I think that might be this thing that more and more people should do, because just finding the new stock, I don't know if that's going to be the strategy going forward, because the computers can run this so quickly, much faster than human brains, and like they can look at these observations so much better, that like actually knowing it, having a long-term view, as Kevin was saying and Bob saying, and then knowing how to run the position might be the better thing to spend your time on more and more, you know? And I don't know what the right stock is necessarily for you to do that, but like whatever you're interested in. So anyway, that's it. This is Wall Street Beats. I'm Ben Bry. That's Bob Morris. It's Kevin Baker. Bakes Baker. And
Just
we are
bakes.
out of here, and
Let's
we'll
just
be
go with
back.
bakes. I'm like Beyonce now.
Can you sing for us?
Not even a little bit. Johnny
I feel like
Cash,
you
maybe.
probably have a good voice.
Johnny
He's got
Cash.
that
That's
deep
my
voice.
that's my register. I can do that.
Johnny Cash is the best. I mean,
Oh yeah.
I love Johnny
I
Cash.
hear the train a running. It's rolling
Kevin,
down.
let me ask you a question.
Fire
Hang on,
away.
the video coming back?
Jen's sick of us, but I can hear you.
Or you can call me if we're not going to get the video. But what do you think about silver here, Kevin?
You know, I'm glad I sold half, and I'm now more of it's almost an experiment. It's still one of the top 10
No,
ETF.
independent of your anchoring. Like, just look at the chart now as if you never had any position. I'm interested in you just looking at the chart and like seeing what you think, independent of Kevin's positions or trades. Like, just look at the chart and give me your like honest opinion if this is the first time you ever looked at the chart.
You know, this is SIL. I'm using this one. This is my granddaddy. You know, the volume is pretty good. It's consolidating. It's in this trend. It's above the 200 day. It respected the support level at 80, and it's okay. It's okay. Now, I obviously want to see it take out this 119 level up here, but
Yeah.
you know, and that kind of corresponds from you break out of a 40-year morass under 50, and you shoot to 120, which was probably too much, and you come back into 70, and now you're at you know, high 70s, 80, depending on the day, which is the middle of the zone, and we'll see how it breaks. But this is the house now. I'm taking off the anchor. You know, I've got the house money. I've made more than, you know, 100%. I sold it more than half of it because I got too big a percentage of the portfolio, and here we are. So we'll see how it breaks. And if it goes the other way, I'll short it. I'll short the brains out. But so far, it's holding in there.
Yeah, I mean, I am, and you know that I was giving you a hard time because I made a lot of money shorting silver at the top.
I made a lot of money being long silver. I mean, I don't have to tell you. I did.
No,
I
no,
made
no.
100% plus.
Again, this has nothing to do with me and you or our positions. I'm trying to say is that I'm becoming constructive on it, and I was just interested in your opinion, like of
Yeah. Okay.
like
So
where do you
what's
at?
what's your uh, what's the thesis on the constructive side, please?
Basically that it's like, hey, silver is a high beta to liquidity. Liquidity has clearly come back into the market. You know, Bitcoin's back at 75,000. There's the S&P has gone vertical, and I would think that like basically that could get a move, and it might not be an all-time new high, but it could get like an echo like boom basically. So you could get like a 20% type of move in it, get everyone excited that, oh, we're going to the high, and you don't even have to wait to see if it's a new all-time high or not, basically. Like you can get a free ride from here of like people wanting to believe it's the super cycle to 200, and it might be. But all I'm trying to say is that like you could get that trade without even having to like find out if it's not, or then like sell it at 110,
It
105.
it did act better when, you know, the risk on trade became prevalent again. You know, pieces declared kind of, and you know, Bitcoin bounces from 65,000 up to 75,000, and the Q's hit new highs. So yeah, I'm with you. I just think 40 years is a long time, and to think that it's only 7 months above that 50 level, I have a hard time buying that. That's proportional.
Yeah. It might just be trading. It might just be a trading thing at this point. I don't know. I don't have a strong opinion, but this is the
Okay.
first time I've been interested in silver in a long time. Like I was big proponent. If you guys go back, like me and Charlie were like big long silver, high ho silver. We were sending high ho silver memes. Anyway,
Yep.
all right, let's roll. All right, guys, later.
Keep
Hey,
smiling.
Ben,
Thank you.
are we still live? I see. There we go. I was going to ask him a question.
See you, Bob.
That's up. See you, Banks.
Call me offline if I can help. Take care.
All right. Thank you.
Thanks, Jen.